All right, good morning, everybody. It's a Friday, another opportunity to get together as a swing trading group. I've already forgotten the date. Friday, September 28th, 2018. Let me start by reminding you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. All right, so last week when I asked you how you're doing, I think 2 people were up with 500 pips, 3 people up or 300 pips, 2 people are up 200 pips. So some of you guys are doing what, even better this week, is that right? You know, break even? Yeah, well, how many? Troy's down. Come on, Knight. 384. All right, that's pretty good, Tucker. $750, that's even better. There you go, that's what we're talking. Yeah, being careful was definitely the right thing to do. All right, so 110 is great. Raymond's up 904.9. I like that. Don't call it 900. 905 would be way up. Greg, 300. Very cool. Very cool. Right, and I think, Raymond, you said you got 900 last week as well, so you're up 2,000 for the month. Amazing stuff, right? Yeah, amazing stuff. Do you often get 2,000 pip trade months, or is it fairly new, Raymond? Maybe you're, yeah, all right, so you're kicking butt. All right, cool. Cool. Oh, all right, cool. So here's the thing. Put it all in perspective. It's only the market. That's it. I happen to be teaching you the right thing to be doing at the right moment, and there's nothing more to it than that. Okay? All right? That's all it is. You're doing the right strategy in the right market conditions, and the market conditions will change. So don't get overly confident and all that kind of stuff. Just really, like, you humble yourself to the situation. We're only doing what we're supposed to be doing, and it's working, and it won't work forever. That's just how it goes. Okay? Right? And that our job is to set up our trades with our bias, get the right prices. Sometimes it's going to work, sometimes it's not going to work. This time of year now, one thing you might want to do is go back and start like the 3rd week of August and look at the trades that you've been doing from the point of view of what if you never took it at all? What if you never moved your stop at all? What if you only entered your trades, put a 100 pip stop, and you never touched them? Or let's say you moved them to break even or something. Because for a lot of people, when they start swing trading, they're like, oh my gosh, 2,000 pips in 1 month, right? For a lot of people, getting to 1,000 pips in a month is an amazing feat. And then you're like, man, I got 2. Wait till you get 10,000 pips in a month. Right? Sometimes it takes longer than a month. I guess I shouldn't say in a month. But imagine taking profit with 10,000 pips and you're pulling them off. Or you're looking at your floating loss and profit and loss and seeing 15,000 pips. Yeah, and they do last longer. They can. Now, bear in mind, like I'm trying to say, I'm trying to get you to see, like, there is a bigger picture. You can accumulate. This can be cumulative, meaning you add and you add, you add, you add, you add, you add, you add, and you add, and you just keep adding, right? But you can do that, and then it can completely collapse. That can happen too. That is possible. I have done it. You can probably do it too. So this might just be the tip of the iceberg. You know, it's, you know, when you were trading, let's say before this course, you might have been like the king of your domain, like the frog in the well. He's king of all he sees, and he can see the entire sky, and he's king of the world, right? But the higher up the well you go, the bigger the sky gets, right? So maybe I'm just kind of lifting you out of the well a little bit. It can get good, but then this stops, okay? So if you're going to join the swing trading group in January, we're not going to be doing this at all. So this is the right thing to be doing now, and it's working. Now, what about this cautionary tale I gave last week? We were in this area here, and I'm like, whoa, 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 whoa. And it's not that this pound yen was falling. It was all the yen pairs, for example. The cautionary tale was, this is where we were supposed to buy. This is where we were supposed to take profit. What do you do with this empty week, as I think I referred to it? What do you do in a situation where there's 4 weeks in a month, but you hit your profit on the third week? What do you do with this last week? Our choices were stop trading completely, take all your pips off the table, walk away. Right? That's one. Second one was cut your lot size in half and keep trading your strategy. But take half the risk. Because we anticipate a change in market conditions, therefore we too must change our behavior to the changing market conditions. What happens, or what do you think happens, if the market conditions change but you do not change your behavior? What do you think happens? What's the consequence of that? Of not seeing the change coming? Okay? So, for those who had a challenging week, then do you think you've learned a lesson that is also as valuable, maybe even more valuable than, you know, Raymond knocking down 1,000 pips? Because here's the thing, you can make 1,000, you can give the 1,000 back. But a lesson is a lesson. Because now maybe this is part of the skill. You signed up for it, you're like, Wayne, give me the skills. Boom! I just gave you the skills. We talked about it in advance. We went from, let's go, here's our plan, we're going to go from here to here, we're all aggressive and happy, to suddenly full stop, shields up, red alert, decision-making time, take your money off the table, this, that, and the other thing, or cut your lot size in half, but do have some sort of strategy, right? Well, there you go. Imagine if I was a coach and I gave you the rah-rah speech to just buy, buy, buy. Get back in, go for it, get long, get strong. We just made 1,000 pips, let's make another, let's go, everyone keep buying. Well, that'd make me a horrible coach. It was the right thing to go cautious, don't you think? The market conditions changed. Why did the market conditions change? Well, we hit the target, right? We hit the target. You know, the other funny thing is, who was it in here that said she only made 200 pips or something? 100 pips. Jenna Jensen. Yeah. Right? You only made 110 pips. Now that's kind of funny too, right? Yeah, sorry, I had to scroll up, but yeah, it's kind of funny, right? To come out sheepish, like, only made 110 pips. That's pretty good too, right? That ain't bad. You know, no, I was conservative. What if change, right? What a change, right? What a change to say, well, I was ultra conservative. I only made 110. I throttled back, right? No, but still, right? There are experts out there making probably $1 million a year selling live courses or something. And they only make 200 pips a month. With 20 years of experience, they only make 200 pips a month. You're like, you only make 200 pips a month? Right? Yeah. And you're like, I'm sorry, I apologize. I've only been trading for a little while. Only be conservative, so I was conservative, and I'm sorry, I only made 110 pips. So that's cool. You're doing the right thing. And like I said, you're gaining skills, I think, that can make you significantly better than most. And I might be talking about most of the 5%, not most of the 95% that lose. The other 5%, you're probably going to get better than that top 5%. Which means the only difference between you and a billionaire is $1 billion. So what you need to do is build a track for success and find yourself a billionaire friend. By the way, I totally forgot. I have a friend who's supposed to make $60 million today. I better send him a text. Hey, did you make the money? I don't want to jinx it, though. But yeah, he's supposed to make $60 million paycheck today. That's good. Shoot, I'd be happy with the $60 million paycheck. Not bad, huh? He made a trade. Yeah, I think he started with 250 million. He made a trade, and it was supposed to come through today. And his cut is 60 million. So anyways, I wish him the best of luck. So anyways, let's get into it, huh? So what do we need to do now? Right? Talbir Kala has a billionaire uncle, huh? What part of the world? Yeah, front running in October. I think so too. We have a choice. Oh, nice. I love Hong Kong. So one of the, anyways, I can't get into the conversation now. But anyways, I was thinking that I'd like to buy something in Hong Kong. Well, if you know him, Kala, are you in Hong Kong? Hey man, we should meet out there. Get your billionaire uncle. Have lunch with the billionaire uncle. Anyways, whoa. Okay, so we have a choice here. We can play this like any given Friday, or we can play this as a front run. And my instinct tells me we should be playing this as a front run for October, not just next week. Which means we won't meet up like Wednesday or whatever. I don't know what the actual end of the month is, but I think we're close enough. Like we've had basically this inside week, which I think is prompting people to want to get into October's trade. So if you're okay with it, I think we should go into these trades with the point of view that we're looking for the October setup. Oh, October 1st is Monday. Okay, well, there you go. Cool. So then it's totally appropriate. All right, good. So let's do that. We'll start fresh here. Let's clean this up. Just be careful, Raymond, right? Be careful. It's always the right decision to be careful, okay? Typically, when traders are making mistakes, they make big mistakes after they make big money, right? But you know what else is true? And this is true in my track record. After every big winning period, there's a big losing period. And I think we could talk about this now. That's okay. We'll talk about being a professional a little bit. Don't let me get too distracted. Why is it completely normal to have, let's say, a huge period and then all of a sudden loss? Troy says, how many days should you know, in a few days before, a few days after? Okay. Complacency, overconfidence, great. No, it's normal. Think of this. I'm a swing trader or a trend trader predominantly. I like to be in trades. I like the bigger wins, right? I mean, I can scalp it all that too, but whatever. That's just for fun. I want to be in trades. That's why I look at macroeconomics, right? Okay. So I can build up. Like, how do you make 10,000 in a month? Raymond made 2,000 pips in a month. But how do you make 10,000? You have to stay in the trades. So what happens if I'm in 30 or 40 trades? Boom! 30 or 40 trades. Oh, that's how you make 10,000 pips. What if you're in 75? You know, one time I was doing FX Bootcamp, and I thought I shut the webinar software off. So I'm like, goodbye, everybody. I'll see you tomorrow, right? And I must have misclicked. So I didn't realize the webinar was running. And then I moved over to my live trading account and put it up. And then I looked at it and I'm like, oh man, I need to go to the bathroom. So I go away for 5 minutes and I come back and the room is freaking out. And I'm like, what? Oh, shit. And I had over 100 trades open. And people were astonished because I'm talking about 5A crosses, and let your winners run. But I'm never like, show people my shit, right? So all of a sudden they're like, I'm like, oh, shoot. So 100 trades. Yeah. And I had 98% available equity. What does that mean? How can you have 100 trades open and 98% available equity? Not all. Mostly. Okay? All right, does this mean I'm an awesome trader, like 98% of the stuff I touch turns to gold? No. No. So what does it mean? Management. Okay. Okay, good. We're getting somewhere. And I'm glad we can talk about this because if I was just teaching you how to get into simple trade, you know, then that's basic. But now you're finding success, so we can talk about how do you manage the success. Very often I don't get to this part of the conversation. So this is good. So what did it mean? How could I have that many trades open but not be like a perfect trader? What really happened? I could pitch that to you. You'd probably believe it. Tucker says, let some. Let all my losers go. No, it's not low lot size. I could have micro lots. If 80% of them were losers, I would have hardly any available equity. It's that when I had losing trades, I got out. I wasn't holding on to any losing trades. The 2% I was down were the trades I made that day. But I wasn't holding on to losers. I lost those. So I have all these trades open. They're up triple digits each. I got dozens and dozens and dozens and dozens. But to get them, I had lots of little losers. Lost 25, lost 50, lost 15, break even, break even, break even, break even. But the ones I got, I kept. So it wasn't that I made 98 in a row. It was like, to get 98, I lost 50, right? I got 100 out of 150, or whatever, you know what I mean? Like, I don't know, a third of them were probably duds, but I wasn't holding them anymore. Okay, you see where I'm getting? But they get washed out in the stats. Because the floating money is there, and you're collecting interest and all this stuff. And all those little losers, they get washed out in the noise, and all of a sudden, you got 10,000, 15,000 pips floating, okay? And then I say, it's time. And I go like this, out. Now what? Now I have no trades open, none. Now I got to start that process over, right? I got to start that process over. So on the stats, it'll show, oh, in December, Wayne made 15,000 pips, right? And what about the next month? What's this 500 pip nonsense, right? Yeah, it usually takes 2, 3 months, 4 months. And it's not usual, it's not, but it can happen, right? Right? But I'm adding and adding and adding and adding and adding and adding and adding, right? So it just grows. And then you get lucky, the market takes off, right? But, imagine waking up and you're up 3,000 pips for the day and you haven't even sat down to make one trade yet. But then reverse that. Imagine losing 3,000 pips in a day because the market came down 80 pips. But you're in all these trades, you're like, 3,000, right? But anyways, it gets there. So all of a sudden, you drop from this to rebuilding the portfolio again. So you can have these massive months and then little months, and sometimes it's negative because you don't get trades for a while, and maybe most of your trading happens at the end of the month. So you're floating some new winners. So you might be up 500 pips in swings, but you took a whole bunch of little losses for that. So it actually shows you you made 15,000 pips in December, and you lost 200 pips in January. But you're floating 500. So you're really up 3, but it doesn't necessarily get hit in stats because they're floating. You haven't closed them, so they're not in the book. You see what I mean? That's why a professional trader will often have a kick-ass period and then a losing month and then a little period, and it grows up, and then it's, right? Because you're beating it up. You're cutting your losers short and you're letting your winners run. You've heard it before, but I hope now you're getting a sense of how it's real. You just may never have had trades that were worth it before because you were trading like an amateur. But now you're getting to the next level, right? Because I didn't want to show you that if you weren't ready, because then you would It would blow your mind. Okay? But now you know it's possible. Now you know it's possible, right? Now you know it's possible. And all of a sudden you're like, 2,000? Shoot, I should have left these run. Just be careful, right? Just don't get overconfident, because sometimes when you let it run, what happens? There was a time, and I'll remember the day, I remember thinking, it was kind of like this. I remember thinking, ooh, market conditions have changed a little bit, right? So I moved all my stops closer to break even to lock in as many pips as possible. And I was in a lot of trades I'd been nursing for a while. Not 100, but like 40 or 50, right? I nursed them, but I'm like, okay, I'm going to move my stop. It was kind of something like this, where I'm like, something doesn't feel right. So I'm going to lock in as much profit as possible. But I still had like, each trade was still like 200 pips away from price. And the next morning I wake up, and I open up my trading account, and there's no trades, and I'm half asleep. I'm like, what? And I'm like, oh shoot, I logged into the wrong account. What account is this? And I can't even see. I'm like, that looks like my live account. And then I go to back, I open my trades again. I'm like, there's no trades. Where's my 40 or 50 trades? Like, they're like babies. I spent weeks and months nursing them every day, worrying about them every night. And then I'm like, and the yen pairs dropped by like 300 pips overnight while I was sleeping. They all just collapsed. Well, I kind of felt like it was coming, but I didn't quite, like, I should have just cashed out, right? But I wasn't quite sure, and I was kind of, I don't know, dedicated to it or attached to the situation. I don't know. I don't think I could blame myself, but you know, I lost like 12,000 pips, right? But I got knocked out with, you know, a lot. 40 pips times 2, because I only lost 2 of the 300. But anyways, something happened. The ends came down hard, got knocked out of everything, and I felt so alone and so cold. It felt like a death in the family. But I did see something. I did move. And then I still remember, like, the whole thing. Like, it really was like, you know, where were you when Kennedy was shot? Or where were you at 9/11? I'm like, oh, I'll never forget, right? Of course, I wasn't around when Kennedy was shot. But so anyways, yeah, it's, you don't want to always be a tough guy. I'm very grateful that I did notice the collapse, because I think the collapse kept going, and I felt better a few days later when I would have been down 50%. Instead, I lost like 10% or something. But you have to understand, to me, getting knocked out of all my trades, first of all, it was a very, very profitable month, and you know, but it means I have to start all over again, and it's very sad. It's a lot of work to build these positions up. And, you know, every time it does this, not to panic. That's a lot of work, a lot of stress. You have a lot attached to it. And when you do get knocked out, especially if it's not quite when you were ready, you know, then it's hard, because now you got to start over, and it's a lot of work. So don't let it get easy. Always let it be hard work in that sense. Yeah, and that'll do it. Sure. All right, so let's front run. Sorry for that big long tangent, but I think you're ready for the big boy stuff, huh? The big boy talk. Plan A. Something tells me that's what's going to happen, and then there's this. So it's really plan A and it's still plan B. I don't know. So let me go through it. I'm looking at this cluster here. Now, it's a weekly support, right? So maybe it does this first. Up, down, and then up. How does that make you feel? Okay. It's going to be a little tricky if we get lower than that. Okay. This is a big deal too. So this is plan B if you want. And plan A would be playing it off of this, right? So you either buy it here or you buy it here. If you're a bull. Okay? Yeah, not really excited about that one. Well, I prefer to let it start moving, right? So your other way of playing it, I suppose, is let it break out higher, then start buying dips after that. So that's okay. So to do that, I think if you're a bull, you still should have, you should still try to get into the trade, because, you know, if nobody tries, then it's not going to go up, right? So what if you could do like cut your lot size in half up again? So for example, let's see if I can do this differently. Let's say, okay, you buy down here, and then you buy another half, and then once you're up here, you start buying fulls. Okay. The key here too is very often is that you hit your support, support holds, and you get a big move, either 100% or a higher high, and that sets up the 1, 2, 3. Okay. In this case, it's more like a head and shoulders. So, you know, you wait for a high and then you buy, or it comes even better, it hits here and then you buy, that kind of stuff. Okay. Is anyone seriously a bear on this? Is anyone a bear on the yen pairs? Does anyone want me to plan pound yen falling? Please ask if you do. Because if no one really cares about it, if we're all bulls, then we can just ignore this, ignore the other side, and I can just do bulls. Okay. Oh, so you want, no, you want to sell and then buy it third week of October? Oh, okay, cool. So let's do it that way then. Okay, you're going to treat this more like a double top. It's going to make a low, it's going to make a high, and then you're going to bring it down. Okay? Target's going to be down here, obviously. Okay? So start hooking some of these up. And this is going to be the big challenge. This will be a big challenge. Okay. Yeah, it's fair. I mean, even bulls want this to come down. So you can scalp your way down, right? Cool. What? Looks like I just killed that by accident. Okay. This one is behaving badly. Okay, it did drop into a buy. It didn't do it the way I would have liked it. I do want CAD to go up. I do want oil to go up. I do want CAD yen to go up, and it's gone. I would have found this very difficult to purchase. It happened too late in the week. There was a very big drop, all that kind of stuff. And now it's way up here, but I can't buy it up there. So that makes that very difficult. So the worst thing you could do here is like tell yourself that you made a mistake, that you should be on it. I think it's difficult. I think it's difficult to play that. You could have, but I don't think it's the thing we typically look for. Like we typically look for like this and this and this, right? Not this, 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 right? And then this. Because then even if the only place you could buy it is down here. So you got to be careful. So the next thing if you want to buy is simply look left. Okay, this is your new buy zone. So you're going to treat it like this, basically. Okay. Yeah, well, see, this is where you get paid the extra. If you stayed in because your bias is based on like seasonality, okay, then you took the risk and you earned the reward. It's not that you added new ones, right? It's that it was part of the trade plan. And I said originally, starting the third week of August, right? Starting the third week of August, if you start buying these yen pairs, you can stay long in right? Not based on price, not based on pivots. You stay long until December. And it was a calendar-based exit, not a price or time-based exit. So if that's what you're doing, you're taking on another level of risk. But if you get it right, you've earned the reward, right? Okay. We might have touched on this at some point. I don't remember. But well, I think it was the pound pair, not the CAD pair. But when it was coming down hard, right? Correct me if I'm wrong, but we did look right on some of these and say, well, right? Well, it is a pivot for October. And if you were going to try to get in, and again, I think it was pound, not CAD, but it's the same kind of thing, you could. You could start front running on your dead week. Oh, I know what it was. Pound was coming down. I said, well, you could let it fall to October pivots. And then we looked at it like, wow, it's like 200 pip drop. But that could be the conservative way of playing it, right? And of course, I just killed the pound by accident, but I think you remember. Right? So that's another right strategy. If you remember, walk away, cut your lot size in half, or let it fall into the October pivots, I think was the strategy on this anticipated challenging week. So anyways, this took off. It's tradable. You could have got it. It's not exactly what we look for, but it's plausible. Kiwi never hesitated. Okay, this goes way back to the double bottom I set up for you guys. Remember, like a week in advance? There's the harmonics. There's not really harmonics, but you set this up. That's beautiful now, huh? So now we could take this, if I can grab it. No. Okay, you could use fibs. You could use price. Okay, zoom in a little bit. And now what? This is the weekly entry. Okay, it's not really a monthly, it's a monthly sell zone. So let's clean all of this up now. I kind of feel bad because we did all this analysis. Okay. So, what do you need if you're a bull? You need a retracement. Okay? What does that tell you for this week to get a retracement like that? Okay. Okay. I mean, if you bought it now, the only thing you really have going for you is the 4-hour 21, which ain't a bad thing. Okay. And you're buying the weekly up. Just depends on how aggressive you are. Okay. So you can do that. If you're aggressive, you say like in October, this is going north, then that's what you do. Oops. Okay. A bear says, I'm not that aggressive, or let's say a more conservative bull would want the bears to take it from the weekly M3, which is also a monthly pivot, so you got to be careful, to here, which is the weekly swing, to set up your monthly swing. And this would be particularly good if you hit it Monday or Tuesday or Wednesday, because it sends the counter trend to this up. So you need to decide, well, maybe you buy it now and put your stop close. And then that plan B would be to go long now. Plan A, sorry, would be to go long now. Plan B would be to buy it here. That's the bullish point of view. The bearish point of view is your plan A, you're actually getting ready to sell, but you're probably going to sell like a triple top. Okay? So let it rise a little bit and then have it roll over. Okay? But you're still, like, this is technically bullish, right? This MACD, I mean, you can't see the MACD, but how do I draw it? Here's the water line. MACD was rising, and then about here was falling, but still above the water line, and then starting to do this now. Okay? So you can ride this up. It's an aggressive trade because you're putting a lot of assumption in there. But this might be the right time of year to be aggressive. To mitigate some of that aggressiveness, maybe you do half the lot size. And if it does make a higher high, you can do a full on the next pullback. Okay, but this time of year, if things go good, right, this little pissy little trade could be up 150, 200 pips in a day. And you're like, well, I wanted to be a little conservative and not get in. Well, maybe this is the time you're supposed to be aggressive. I tell you to be conservative in the middle of summer, right? After the June meeting, I tell you, be conservative. Expect less. Start shooting at rabbits. This may not be time to shoot at rabbits. It's your call. USDN. It's Oscar Mike. So when you look at this, you have to ask yourself the question, is it dollar strength or is it yen weakness? It's very important, because if it's yen weakness, then you know all the yen pairs are going to go up. Okay. Look how tradable this has been, huh? Well, you can't front run it long, okay? You can front run it short. Was there a front run opportunity? This one kind of was 2 days ago, but that may not have been as good of a trade, right? But this is beautiful, right? Up, 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 down, down, buy. 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 Up, 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 up. Did we get it down, down yet? No. So what if it goes up without you? So what? Get over it. What's your job? The up, 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 or the down, down? Your job is to wait for the down, down. Up, 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 down, down, buy. 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 Okay? And that's how you get to your 10,000 pips in a month, because, you know, you bought the bottom, never took profit. Bought the next one, never took profit. Bought the third one, never took profit. Bought the fourth one, never took profit. Bought the fifth one, never took profit. Bought the sixth one, never took profit. Now you're in 6 trades. And all your stops are probably here. And 6. Okay? And that's what you're doing. As soon as this makes a new high, new low, because it's a little risky, it hasn't made the pullback yet, right? So now you wouldn't do anything if it does this. Let's say, well, I guess I should use the pointer. Let's say this goes up a little further. Oops. Comes up to here. Then comes down. What do? Buy, number 7. And it does this and makes a new higher high. Man, I'm really trying to jam this in here. So now you're in 7 trades. Okay, there's one there. Now you got to move your stops. 1, 2, 3, 4, 5, 6, and then 1 for the new one. 7. You get it? And you just keep building it up and building it up. What do you think of that? But you see the potential, Tucker? I don't recommend this in the summer, but I do recommend this time of year. You know, it's not as tough as you think. Because look at, these are all swing trades. The only challenge is, do you take profit here and here and here? But you remember, this time of year, you kind of expect it to keep going. We did talk about it 3 months ago. We did talk about it 6 months ago. We did talk about it 9 months ago. So it's pretty reasonable that starting the 3rd week of August, you're like, okay, now we're going to turn the ship around. Now it's going to start trending. and you have the potential for this type of trading. How many people heard me, like, before signing up that 10,000 pips in a month was possible? Like, that might have been one of the reasons why you even joined the swing trading group. Yeah. Well, that's how you do it. That's it. So I'm not trying to say that it's easy. I'm not trying to say that. This is the time of year you try it. Right? And this is only USD yen, so it doesn't move that far. But, you know, that's 150, and that's, you know, 120, and this is 100, and this is 80. And you just keep it going. But now imagine that was pound yen. You know, that'd be 4,000 pips right there. So that's how you do it, by the way. That's all I'm demonstrating. I think we did Kiwi, but we didn't do Aussie. Okay? Once again, you should realize that this is the area we actually want to buy. I'll mark it like that. It just looks pretty. Okay, that's where we want to buy. There's a plausibility we don't get it. That's why you need to be a little more aggressive. So you look right this time, not left. You look right and you're front running, right? Now, of course, you would have preferred this, and I already marked it out, and it went a little too low. But you have to decide, are you willing to miss it, or are you going to try to get in? And, of course, like I said, if you're a bear, this is where it's going to collapse. Can you get in? Can you jam a stop? Can you get in for half the lot size and jam a stop? Yeah, probably can. Okay, let's go to the dollar pairs. Let's clean this up. Perfect 618, perfect 50% if you're using the pivots. M3 plus a monthly pivot. Looks like it's an R. Okay, does that get us into an entry? Yes, it does if you're a bull. Okay, you see this period in here though? This is Wednesday, Thursday, now we're in Friday. This is the new pivots. Somebody asked here, maybe it was Tucker, asked, when do you start front running? It's different every time. Is it possible that you can front run the last Wednesday of the month? What do you think, guys? Yeah. Especially if you're sort of counter to what's been happening. Because you're not likely to have it 3 days before the end of the month be at support if you're a bull. But you're probably at resistance if you're a bear. Okay? So be ready for that. If you're sort of counter to current market conditions, pay attention. So write that down. Because if you're trending, you need time for it to retrace. So it's probably the Wednesday after, probably the first Wednesday of the month that you get your trending entry. You're right, the retracement bounce. But it's probably the Wednesday before the end of the month for the counter trend. Okay? And of course, in this case, let's say you're a bull, you need the counter trend trade so that you can trend trade, which would look something like that on the longer run. Now, there's going to be some dipsy-doos before it goes straight up, but that's the logic, right? Probably look more like that. Okay. It needs to come down so it can go up. Well, first of all, Tucker, you're a bull at your price, and we're nowhere near your price. Okay? Make sure you're entering based on price. 2155 is just a guide. It's a helpful guide, but it's not the law. So if you're a bull, you would buy it here, or you probably buy a double bottom. That'd be of interest to you, wouldn't it? I want you to look at it that way. You're buying this area because you just see this as a kickoff of the target, and you're going to buy it back up. So you can buy it here, you can buy a double bottom, you can buy a higher high, higher low, right? So as far as you're concerned, plan A is here, but plan A could be A.1, A.2, right? You'd probably even get another move in here. Okay, so you get A.1, A.2, A.3, A.4, or B. Okay? If you're bullish and you're making decisions based on long-term macroeconomics and central banking policy, then nothing's really changed. So if it wants to fall a little further, that by all means, you don't have to sell it. And you don't have to keep buying it on the way down. You either buy it here or you buy it there. It's a big deal, right? I think we did Euro, didn't we? Didn't we do Euro? This is a buy zone, right? No? All right, there's a buy zone. Okay, would you agree that we're at a weekly target? Would you agree that this is where bears are supposed to take profit? We don't know if they will, but what are the rules of engagement? The rules of engagement are they're supposed to take profit. Cool. What monthly pivot point are you supposed to buy it if you're going to front run October? Okay, so that's this. You get it accurate, okay? And thirdly, what weekly pivot point are you supposed to buy if you're a bull? That's this one. Okay. So you have a psychological level of 116, next week's weekly M2, next month's monthly M2, this week's pivot profit zone for bears, I guess you can throw in that monthly pivot as well, because we're going to count this as, even if you deleted the pivot, it's still support, 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 isn't it? So it's not the world's greatest setup, but do you think it's plausible we see this next? Cool. Where are the bears going to sell? Oh, bears are going to sell here for sure, right? Can't you just smell their orders? You gotta get me out of this prison. I can't stand the stench. That's Matrix, by the way. Yes. Right? You can smell the stench of the bears. Okay, so plan A for bears, plan B for bears. Okay, you got it? Yeah? Oh, show! Swissy, would you buy here? What if it goes up? Buy the retracement. Right? What's the big deal? Okay, what if you're a bear? This smells pretty good. Or, right? More likely you would see this if you're a bear. Okay? All right? With that being said, what if you're a bull? Let the bears bring it down so you can buy it. Plan A, plan B. Plan C is this. What do you think? Are you starting to like trade planning? Oh, I'm including, yeah. Kenny, I'm including the front running in this. It's part of the analysis. So I'm looking here, not just because it's a weekly pivot, but because it's a monthly pivot. Not September pivot, October pivot. That's an October pivot. That's October M3. This is the weekly R2. The bulls are supposed to get out. Okay? Oh, sorry. Do you want me to go back on pound dollar? Do you have a question about that? Yeah, it's always the 4-hour 21, Raymond. Oh, okay. Oops. All right. Yeah, okay. What you got? What's the question? So the sell is the front run. Okay, essentially. Oops. Gee whiz, I keep clicking on the drawing tool and I ain't drawn. Let's try it the third time, okay? Absolutely. But I drew that. Now the drawing tool won't let go. Come on, drawing tool. I guess there's lag or something. Okay, see? I already drew that for you. Bulls want it to fall. And I'm just guessing there's a double bottom before the rise. And then there's this, and there's this, and this. So I think the way I called it was, if you're a bull, plan A1, because it's the same support, plan A2, right? It's the same thing. Plan A3, plan A4. These are all buys. Of course, you could put A1 here and put your stop there and just never re-enter. That's fine too. But you should recognize that this is an opportunity to buy as a bull, so on and so forth. And that you should also recognize that there are bears here for sure. And this is profit taking up here for sure. Okay? So I guess looking at this and looking at the timing of your question, you're wondering if you should buy it now. Okay, all right. See, I can read your mind. All right. Yeah. Yeah, you chip away at it, right? Sure, absolutely. Gee whiz, this drawing tool is lagging. I click stop and it doesn't stop. There we go. Okay. So our weekly, is that our M3? Looking at where it shows the prices, plot, true, plot pivots, plot future pivots, plot labels. I guess I see price levels. There we go. So I had to put the borders on. All right. So you can see, of course, it doesn't fit. Let me get rid of this. Funny, I'm trying to get this label here where it says pivot point. You don't see it to the right. It just doesn't do it. So anyways, yes, your front run trade plan would consist of you buying it, okay, at next week's M2. Do you have permission to do that on top of next month's central pivot? Yes, you do. So you drop into a small time frame, and anytime you see a turn, you can take a shot and drop a stop. So yes. That's the same tool. Oh, but you as far as the templates and stuff too, so you don't have to customize them yourself. Yeah, just hopefully by Tuesday. Yeah. Okay. Well, I think that's been a swing trade, huh? A swing trade session. Seems like we got it pretty good, right? Unless you have another one that you want me to cover? Yeah, by the way, I love daily, but that's day trading, not swing trading, right? Maybe Euro Swissy, sure. Oh, there were a few others, Joe. Right on, Greg. Yeah, I think swing trading is a very, very good way to make a living, especially if you're not a full-time trader, that you got an other job and stuff. Because it can't take that much of your time to set up swing trades and stuff, right? So it's a great one. All right, so Euro Swissy. Okay, what am I supposed to say on this one? You hit the target. Let's go up to the 4 hour. I have this really crazy lined up. So this is, oh yeah, I remember. We talked about this earlier in the week for a sell, didn't we? Looks like on about Tuesday. Yeah. All right, well, looks like I was right. You're welcome. What do you want to do now? Well, it's hard because it's not an awesome trend at the moment, is it? But, you know, the routine is the same. This is a weekly buy. This is a weekly buy. This is a monthly buy. This is a monthly buy. The moving averages are not great. We're not quite at the pivots. Okay. Why don't you look at, so like Euro Swissy is okay, but you have to realize there's a special relationship between Euro and Swissy. Who asked for Euro and Swissy? Oh, Delver did, right? Yeah, those two currencies have a special relationship with each other. So there's a little extra caution on that one. Here, I just don't see like an amazing opportunity. If you were going to sell it, you already sold it 2 days ago, like I advised. So we wouldn't do it now. And then you could buy it here, but you know, I don't know. You'd hope that there's something better, right? So like Aussie Swissy, CAD Swissy, Pound Swissy, for example. Pound Swissy. Wait, that's Pound Swissy. I thought it was in Euro Swissy. Oh, I apologize. I apologize. Okay, let's try this. For some reason, I thought it was on Euro. My bad. All right. Looks like we had a plan A and a plan B, and plan A is working. And then you can see I already have the new plan A. This is a buy. So yeah, and it's a front run. So yeah, if I was trading Euro Swissy on this one, let's clear this up. This is simply higher high, higher low, front run. Right? That's all. Okay. Where are the bears going to live? Seems pretty logical, doesn't it? And there's going to be some bears here. Okay, bears are going to sell here, bears are going to sell here. Okay, this is bullish plan A. Bullish plan B is not very good. I don't think I have a plan B, if I'm a bull. Okay. Yeah, make a range bound. I'm not that interested. There's got to be something better to do. If this goes range bound, I doubt pound yen's going to stay range bound 2 weeks in a row, right? Cool. So for those that didn't do so well this week, please do that homework I gave you. Sit down, think about it. Why didn't you respond to the changing market conditions? Did you not see it? Did you not believe me? Did something else convince you? Did volatility from FOMC or something else get your juices flowing? Did you get emotional? Did you get delusional? Was it bad medication? And then what is the sort of teachable lesson that you learned from this experience that you can carry with you and share with others for decades and decades and decades? Make sure you walk away with the poor performance as an asset. Don't make it a liability, okay? And I'm glad you guys are finding success. I'm glad you guys are thinking bigger and you're seeing the light at the end of the tunnel and all this kind of stuff. But like I say, stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Yeah. But thank you for being on my team, and hopefully you guys will be ready to either trade a demo account with MetaTraders, and you can continue this, or trade a live account at MetaTraders. Right? Remember, you get a $25,000 account, you put in $5,000, and the rest is for you to build a track record of success trading other people's money. I think that's pretty cool. Takes a lot to do you. I suppose it does, eh, Tucker? I suppose it does. All right, so now I got to go do some Harvard work. Take care, guys. See you next week. Cheers.